TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 25th of May here in 2021, which means June's not that far away. And we're going to continue the same thought process we had with last week's video with respect to the box, the volatility box, or the sideways action. It's just a sideways trading range. And we can see that here in the S&P futures. This is the daily chart, which takes a look at the bigger picture. Over on the right, I have the hourly chart. And this is more for short-term traders. And I think the clearer levels are here, which is about 4060, or to be really simple, 4100 on the S&P, and 4200 or 4220. So let's not get caught up too much on 20 points up or down, but it's just a sideways trading range that continues, which means for very short-term traders, the edge or probability plays off the long side from the bottom, and that would include, again, 4050 or about 4100. Think of this as a range, not perfection. And when the market's up at new all-time highs, that's going to favor short-term tactics to play to the downside. We call those fade type of tactics. That's true in the S&P. We can also see that play out on your charts in the SPX. So what we do, although we have a dominant or big picture uptrend on the daily chart, this short-term hourly chart is just sideways or range bound. That is going to lead to what we call fade or range type of trading techniques, which again just plays low to high and high to low on a short-term basis before we get the breakout. This is the Nasdaq into its weekly expected move, which is a key level, especially if you're playing to the downside in the market. Short-term traders again only. And that's what the videos are geared toward, what's happening in the market right now. And for the Nasdaq, it is worth mentioning that that weekly expected move, there we are, the chart loads, into right about 13,700. Again, weekly expected move logic plays off the short side when it's into the top or the upper bound, and plays off the long side logic. Again, not perfection here or prediction, but giving a framework for short-term trading. Again, more than not, when the market finds itself at the lower bound of the expected move, the next swing to the market tends to be to the upside. And that's essentially where we are at this point. It doesn't always work, of course, but last week we saw the market come up from the lower bound. This week we could see the market come down from the upper bound, and that would just continue this broader picture trading range. That's what we're looking at for the short term of the market, all things being equal. In the Dow Mini Futures, we see the market moving down from 34,400. And again, I've drawn some lines on the short-term chart just to note that. We're taking a look at the bigger picture because we're going to talk about individual sectors, which includes financials, and they are quite ripe for a short snap or pullback. This is the Russell, and let's go back a little bit farther here and zoom in closer. We see that the Russell's trading range is about 2,300 and about 2,150. That takes the midpoint to about 2,220. And if you're playing the short term, just a little swing ahead of us, that most likely is a downswing, just like this. So we're not calling a top, not calling a bottom, just saying short-term tactics favor the downside, of course, playing in both directions. Now, that is going to be in part because of the financial sector, which itself is in a sideways trading range. So your key level might be initiating from the short side is against 38. So again, no prediction type of thing, but just levels to watch and update and trade on the short-term basis for a potential sell swing down from the 38 price point. XLK is technology that's tied into the Nasdaq, and that level could be 140 for its ETF. The consumer discretionary ETF is already off the high and is traded from 180 down to about 165. It's a little bit weaker in that sector. We'll keep going with these sector ETF updates. 105 is the industrial sector, and again, that trading range appears in here in the short term. Materials is B, and that looks a little bit like the financials. It's still trending up, but the most recent moves have been sideways or consolidating. That means we are not going to take strong directions in either position. We're going to wait for a breakout or trade from high to low within this trading range. That's energy, which has been a little bit weaker, and that is the weakest sector as of this recording. It's down about 2% on today's session. And staples, these three right here at the bottom of the chart or of the watch list, have to do with defensive names, which include staples, which is flat on today's session. Still, again, the theme of the video, the last week's video as well, has been trading ranges, has been boxes, and not directional really either way. That's going to play a short position off of 125 in healthcare. And utilities, you'd think utilities with the market trending down, or at least coming down, would be a little bit stronger, but that's what we're discussing here. Short-term trading ranges, maybe even a declining trading range. And again, that is within the context of a prior high. So we're looking to, again, just from a directional standpoint, short-term trades lean to the short side from resistance, maybe to the long side off of support. But that just frames out the trades and takes everything into a simple sort of framework. Now, that's the main sectors. One thing I want to highlight, as I normally do in the videos, is which stocks are making new 52-week highs or yearly highs, and sort them by market cap. What are we seeing in the commonality? These are stocks in the S&P 500 that just made a new 52-week high as of this scan or this watch list. And from the top market cap down, we'll just take a look at the first few. That's JP Morgan, that's a financial company. Bank of America, BAC, that is financial. Morgan Stanley, Citigroup, BlackRock. Raytheon is the first company in that market cap list that isn't a financial, but under that is Capital One, and so on down the list. So these are stocks at new highs, but again, the video highlights what is working right now, and right now is going to be to the short side of the market. Very short term, short sell. For JP Morgan, it's going to play a similar play or pattern from the XLF. Remember, big stocks in the XLF make up the XLF. So if you would prefer to trade the ETF, you can position into puts or position into spreads to the downside. If you want to take a little more risk to play for a little bit more return, because individual stocks could move faster or fall further than the broader ETF, you can take your positions or short-term trades into these names. And that would include JP Morgan, which has resistance or a short sell opportunity off of about 164 or 165. And that just plays down to about 160 for a very short-term trade. And the reason for that would be this is the prior resistance and sell swing. This is the prior sell swing, and we have a current sell swing. Of course, no trade is guaranteed, but that's what the logic is at the moment. And for Bank of America, you can just play different price points or different option statistics or liquidity. That's going to play off of 43 per share. And Morgan Stanley plays down. That's a little bit higher because that actually did pierce right now to a little bit cleaner high. But the short is up against 90 for Morgan Stanley. And we'll finish the video with Citigroup. It also is trending to the upside, but like anything, markets don't go straight up. They don't go straight down either. They tend to move in swings. So very, very, very short-term traders can try to play from 79 down to about 76. And again, that's just playing within trading ranges. Call that shorting the highs or trying to buy the lows or target lower prices. No guarantee, as always, but just playing probabilities and playing trades that are setting up right this second. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for May 25th, 2021.